Hi everyone, welcome to Hustle Muscle Invest. Happy New Year to you all. 2025 has been a great year for the markets with most indices going up double-digit percent. The S&P 500 has logged a 17.9% return, and specifically within Singapore, we see this beating the S&P 500 at 22.7%. For my portfolio, because it's riding the trend and the uplift of a rising tide, I'm up 20.58% as well. Again, before I start, this is for my investment research, not financial advice, okay? In totality, the portfolio's gains are as follows. It's split by the different segments, the different stock that contributed significantly are also shown here as well. I do have to thank stocks like Capital, my ETF of the STI, and also OCBC that has obviously risen much more than I would have expected as well. I'm getting a little bit scared, to be frank, in terms of whether or not I would even want to keep adding for stocks that have gone up so much, right? And because the strategy is really to actively add into the stock portfolio to gain more potential for dividends. I do not think that in a total approach the dividend yield is high. I would actually expect it to be maybe at least 5 to 5.5 or even 6 for 2026, but let's see, because for Mapletree Industrial Trust and also for Capital and Escort Trust, it's bought in the middle of the year and it's not completely fulfilling the whole years of capital gains as well. I did add growth stocks for the later part of the year. ASML, which I'll talk a little bit about afterwards, is one of the growth stocks that returned 45.2%. And I do want to talk about the loser as well for Lululemon. This is something that I bought together with ASML, and it has not exactly performed. Now, what is ASML? ASML is a lithography machine provider that is key to the AI boom. It provides custom-made machines that companies like NVIDIA, ARM use that is essential for the AI arm race right now. Interestingly, because of how the market has noticed it being the picks and shovels of the AI arm race, it has its own fair share of peaks and troughs over the past 5 years in terms of its share price. But over the past 1 year, the market has started to pay attention. This can be seen by its price appreciation of more than 50% for 2025. And yes, I've been fortunate to catch on this trend while it's rising. The company is not a small one in market size. Market cap of 114 billion. 414 billion is not small. And when we look at the metrics such as revenue, net bookings, and lithography systems machines sold, you can see the trend down here. It's obviously benefiting from the AI uptrend, and interestingly, for each machine sold that you see here, it is so complicated, so expensive that only they are able to provide the maintenance services, which is represented here, okay, broken down into different segments that they term it right here. I like to use Qualtrim, which is a tool that I use for research to actively search for companies like this, especially if they are listed in the US stock markets. Net income obviously has risen as a result of the increased revenue, EPS as well. And if we looked at the cash flow strength of the company, you can see that the company is in net cash position, incredibly strong, and in Q3 2024, it's even at $14.9 billion for its cash on hand. And When it comes to valuation, I do think that, as we've seen with its share price, it has its own shares of peaks and troughs as well. Let's take a look at the valuation metrics for the past few years. For its price to earnings ratio, you can see that alongside the fluctuations of the peaks and troughs in its share price, the converse values of PE mirrors the effect that you see down here. So in 2025, where there were certain troughs that we've seen earlier on in the price chart, this mirrors this trend line of the trough that you see that was seen in 2022 as well. Not the lowest, but in that region. So to be honest, when I bought in July, on 18 July, I bought 1.5 share at $738. It's not too bad. Not too bad. Not the lowest, but not too bad. And I intend to keep this company, as I expect it to continue to benefit from the AI trend. Now let's talk about Lululemon. Lululemon is a company that I spotted because I felt that the price drop was pretty attractive. It's an established brand. It has its own share of moats. Yes, I know the retail space for athleisure is extremely competitive. It has ALO, on cloud, right on its heels. And this price fall in 2025, where it significantly underperformed, let's say, ASML, where it dropped more than 40%, is really one of the key points that I was intrigued by, because when I looked at the metrics such as its revenue, its profitability, it's all rising in a certain way where it just sort of seems quite weird for me not to take a deeper look at this. If you can see from here, revenue, beta, net income, EPS, and free cash flow are all rising in the past few years. It's a contrasting kind of picture compared to its share price. So obviously the market has punished the company for several reasons, especially for its people in power. After changing the CEO, I do think that 2026 is going to have more uptake for Lululemon. Its cash on hand is also strong, where I do think that this company has its fair share to be able to turn it around. In terms of valuation, you can see that the valuation sort of mirrors what you see in the share price as well. Of course, expenses has gone up significantly in 2025. And let's go back to valuation. I would like to take a look at the valuation over the past few years. Let me just go here and take a look. Yeah. Now you can see the price to earnings ratio over the past 5 years. This is really in the trough zone, It's not even close to where 2024 was. It's a step down. Trading at such valuation, I don't know. I just felt that it's not too bad of a risk to buy this. I bought 4 shares at $232, also on 18th July. So let's take a look and see whether or not Lulu will perform in 2026. But this is a bet for me, really. Now let's go and take a look at the last company that I'm going to talk about. Something that has been on my radar for a while, and I think I'm going to pull the trigger this year. Netflix. Netflix is something that most of us use for streaming content, watching series, and of course, they've got their own sets of boom from 2020 during the COVID years till now. And most of the people I know and most of the observations I've made is that Netflix is something that once you subscribe, you generally, even in bad conditions, do not really cut it off completely. It's exhibited here by the rising revenue over the years, the different regions contributing to it, although the US is still the most in terms of contribution. You can see the uptake coming in different markets, and currently the total subscribers count is also indexed against the rising revenue. Now, the market has punished the stock price, obviously because of the confusion regarding the Warner Brothers deal. Personally, in my opinion, I do think that the deal would be yield accretive to Netflix. Not only would it boost its total number of subscribers, it will give it a lot more content library and have opportunities for upselling and even increasing different types of monetization options than it already has right now. Its metrics are very strong because of the rising revenue, and you can see the net income and EPS is also rising in tandem with that. Its cash position is also very strong. The change in the deal structure recently is that they're going to use an all cash position to buy out Warner Brothers instead of the stock option previously. Regardless of that, I do think that this company is a company to watch, especially when the valuation right now is not as high as it was. It's not the trough, but it's not that bad. I do think that share price may come down to $80 or lower, and I will start to accumulate in different tranches. So yes, Netflix is something that I would very much like to trigger in 2026. With that, we kick off 2026 with many guesses. Will the S&P continue to outperform? Will the STI also log double-digit gains this year? I don't know. But what I know is we've got to be consistent, and I will do my part to be consistent in the quota that I've got to allocate. If you find this video useful, please help to like and subscribe, and I'll see you in the next one.